Okay, good morning, everyone. I want us to analyze AUD USD, NZD USD, Gold USD, GBPCAD, and also and gold. I think I mentioned gold before. So my expectation on AUD USD. So as always, we look at the market from the higher time frame because higher time frame is the key to every setup, right? So let's look at the daily time frame, or we can even let's look at the daily time frame, quick one on this one. So if you look at the daily time frame, there was I think this setup happened last month, early last month. So and the market has been consolidating, went into consolidation here. When this I think blind spot, yeah, this blind spot play out, the market went into consolidation. And then I was in opinion that the market is going to, when the market break this low, it's going to be going down. But however, after consolidation for some days or for about a week or close to 2 weeks, the market finally break out this problematic area here, this resistance area here. The market breakout, which means that this market is giving us a bullish direction, right? We are going to be buying this guy. Remember, when market is moving in an uptrend or moving in a downtrend, everybody is looking at the market in respect to their strategies, right? If you're a trend line trader, while the market is moving up or moving down, you are looking at that market in respect to your trend line strategy. If the market can move in line or in shape with what you want to see, like people who are looking for smart money, liquidity people, they also look at the market in respect to liquidity while the market is moving up. So as a Bastra student, you're also looking at the market in respect to Fantasy 5, right? So so I believe that this market is going up from the weekly time frame. You can also see that the market make an impulsive move. This is impulse, correction, and then impulse, right? So we are expecting this market to push all the way to this point here. This is the danger zone. Like most of you have been asking what is the danger zone. I've explained several times. Danger zone is the major supply area. Look at this major supply area or major demand area. This is a danger zone. This is a danger zone. This is the danger zone. So what we are trying to I mean, one thing about the danger zone, this is the major supply area that when price get into this danger zone, we can receive a serious selling pressure back down. So that is why we want to move from this point where the market is. We want to see how we can capitalize the buy on the lower time frame until we arrive to the danger zone. And we don't buy from the danger zone because the market can sell from there. And if we find a setup that is close to danger zone or is reacting from the danger zone, that setup can become high risk. So that is that about danger zone. So you need to also, and also danger zone give you direction where you feel like market is going to push to an extent. So let's go to the daily. And now the daily finally break this resistance area here. And then we should be going up. As it is now, the market has break this resistance area. Do you think the market is going to continue going up? No, the market is going to retrace before the market can push back up, right? So because before the market can push back up. So how do we now capitalize in respect to our own strategy? So we begin to look at the market and see the possible areas that we can join the buy in respect to Fantasy 5. So now the first thing you need to do is to understand the trend. Now we have understood that the trend is going bullish. So we should be looking for Fantasy 5 in that Fantasy 5 in bullish direction, right? So let's go to H4 time frame. If you look at the H4 time frame from this guy, you will see that we can mark this area here. This one. This is a blind spot, bearish engulfing made by this significant break, right? Also, this one is a bearish engulfing, but this one looks so beautiful, right? And also, if you look at this candle here, you will see that it's something like imbalance. So now I have to put my line from here to this point. So where I'm expecting the market to retrace back to this point here, give us a sell confirmation on the lower time frame for us to buy. If we want to buy AUD USD successfully, we have to wait for retracement, because looking at the market, you see, it's just like consolidating. The market is giving us a sign that is like he wants to go into exhaustion before the market can have more power or more momentum to push up. So this is how we look for the direction or the trend of the market in line with Fantastic Five. Now we have a blind spot here, and also then for us to be able to be sure that this blind spot is going to hold from this point, remember, we always look for confirmation from the higher time frame. Is part of what is part of multi-time frame multi-time frame analysis. So since we found this blind spot on the H4 time frames, our confirmation is going to be daily and weekly. Our confirmation is going to be either full body candle or bullish engulfing candle, right? So if we go to the daily time frame, do we see any confirmation here on daily? I don't think there is a serious confirmation, right, on daily time frame. I don't think that there is a serious confirmation here on daily time frame, right? Let me put. So let's go to the weekly time frame. So if you go to the weekly time frame, we can see this as what? This weekly as full body candle here. Look at the momentum candle. The candle is showing us a strength of buyers in the market. So the market can push all the way in the lower time frame where we found a blind spot for the market to continue going up all the way to the danger zone, which is our target, right? So we are going to be looking for buying opportunity or to get to that danger zone. And when the market gets to the danger zone, we'll wait to see if the market breaks or if the market rejects from there. So this is that for AUD USD. So let's go to NZDUSD as well. This guy also move alike. So if you go to NZDUSD, you see that we have NZDUSD and USD, they almost have similar chart. So I've already marked this setup. We have Quasimodo reversal here. That is number one. We also have what we call a scenario C1, right? A scenario C1. This is a scenario C1 somewhere here. This is a scenario C1, right? And then this is a blind spot. So there are times that you will find two setup at the same position or at the same point. This is what we call, or this is what Nora called the strongest key level. So, you know, when we talk about the strongest key level in Bastra, it doesn't mean generally strongest key level means some support and resistance on the chart. So when we talk about strongest key level in Bastra, it means that what that means is that when you find two setup in the same place, so that is the strongest key level or the strongest setup, right? So without wasting much time, let's look for confirmation of this Quasimodo reversal or SNRC1 for us to be sure that if this market finally gets here, I will be very we'll have a lot of confidence to look for buying opportunity. And also what you need to know is that this market can come to this point and then keep dropping. That is why you need to also wait for confirmation. From this point here to this point, if you go to the M50 time frame, it's giving us characteristics of a downtrend like this. This is what you need to know until the market enter here. So if the market is going to hold, the Dow theory is going to be breached, right? So the Dow theory states that the market will continue to move in this specific direction until the preceding structure breaks. Now, if the preceding structure breaks, what makes the preceding structure break means that this our Quasimodo is going to hold, which means we're going to see something like this. the proceeding structure is going to break, or the Dow theory is going to be breached on M15 time frame, and then either we have a blind spot, which is a reversal, or we have a Quasimodo, or we have manipulation entry formula. So the most setup that they use to print is the QMRO, or sometimes blind spot. So when they give us something like this, then that is when we are willing to risk whatever we want to risk in the market, and then have a tight stop loss, right? So this is what to know until you see buying confirmation before you enter, because the market can keep tanking down. So this is what you need to wait for. But then before we keep waiting for this setup, you go to the lower time frame to look for confirmation, multi-time frame analysis. As we keep saying, the confirmation is also going to come from the daily or the weekly time frame. So when we look at the daily, you see that there is no serious confirmation here from the daily time frame. So let's go to the weekly time frame. Can you get Jessica, don't call me now, big. She can't see me this one now. So if we look at the weekly time frame, the weekly time frame is giving us a confirmation here, but this confirmation candle, look at this one, it's a high risk one. So which means the market can just switch below, can go below before moving up, but it's still a bullish engulfing candle. It's still a confirmation. So with this, because the market has been struggling to, break this area. So the market wants to retrace back down to have that momentum to be able to push up, right? So, and also looking at also this candle here, there's a lot of strength that make this that pushes this buy up for this candle to close as a bullish engulfing. So the market wants to retrace down and then push. That is why I told you on Monday free Zoom session yesterday that this market, because of the last week news, the market can use 1, 2, 3 days to do only retracement before the market will start shooting up. Because of that momentum that pushes the market up, the market is not just going to continue going up like that. So let's go back to the H4 time frame. So this is the reason why when the market finally get to this point, we are going to wait to see entry confirmation, and then we enter with good risk management, and also measuring our risk to reward ratio. The risk to reward ratio can never be overemphasized, because it's very, very important, very important. In my own belief in Forex, it's very, very, very important. Imagine understanding risk to reward ratio. We smashed 7%. That is crazy, 7%. So imagine we'll have another trade this week that will give me like 3-4%. It's already a crazy week. So smashing 7%, even if I lost 2 trades again this week, 1%, is still not going to ask. I'm still going to end the week profitably. So a risk to reward ratio is the only means that is going to help you to be able to grow money in your account, because you are not going to win every trade. That is the truth. So let's look at, we're done with this one. Let's look at GBPUSD. Okay, let's look at GBPCAD first. I think, yeah, I have a markup on GBPCAD. So here we have, like I have not been even looking at this pair. I mark this blind spot here. When it played out, before I could even remember that I marked this blind spot, the market has played out already. So, but then we have a Quasimodo here again. So what we are expecting the market to drop here. But then we want to always see something that happened on the higher time frame. So we don't just come and start looking at the lower time frame to trade or to determine the trend of the market. So if you go to the daily, let's go to the daily, you see that this market from even the weekly time frame, the market is showing us what? It's showing us an uptrend, an uptrend. So this is higher high and then higher low, which is the retracement, and then the market is already currently in an impulsive move, right? The market is about going up to give us another higher high. So we want to look forward. We want to look for opportunity to go with the trend in respect to our strategy, which is the Fantastic Five, right? So, which is the reason why we should be looking for buying opportunity on GBPCAD, right? So with this blind spot, I mean, Quasimodo we found on the H4 time frame, we want to also see the reason why we should buy this setup. Like I said, confirmation is giving you, is boosting your confidence that when this market made mistakes, like when the market comes here, then you should buy. So if we go to the daily time frame, I think we can see confirmation on daily. Yeah, if you go to daily, you will see this momentum candle as confirmation. What is this? What does that mean? It's giving all the strength of buyers in the market. We found a reversal setup, Quasimodo reversal on H4 time frame. And the daily time frame, we found this full body candle, full momentum candle. Is giving all the strength. Reversal means market is changing direction. This full body candle is telling us the strength of these buyers that are ready to push the market up, right? This is the confirmation that we need. And what we are expecting the market to do is to make mistakes and just retrace back down to this point. Then we engage. So let's go further to weekly. Go further to weekly. You also see that this is what? This is a serious full body candle. Single, this is a full body candle momentum. But if you combine this candle together, this is like a evening star, right? This is an evening star candle. All of this, they are telling us the market is tanking up. So this is the reason why we have to wait for the market to retrace, because market move impulse correction. This is the major reason why if this guy come back to this zone, then you should be looking forward, buying opportunity. What I noticed on GBPCAD is that it hardly produce a mini setup on a lower time frame. So if the market comes here, maybe the market will be moving like this. Then the moment the market on M15 time frame, the moment the market enter here, you see the neckline break, then you enter. You may not necessarily wait for a mini setup, right? You see the neckline break, then you enter to buy and put your stop loss below. So because the neckline break also is what is a sign of what is a confirmation entry, but we use this neckline break 100% with gold pair, right? So this is the reason why we have to keep an eye on GBPCAD as well to be able to take a trade. So we can take our trade. If you look at, if you want to determine the danger zone in this example, we can say, okay, fine, this is a danger zone. Danger zone, like I said, is a major supply and demand area in the market. So this is the danger zone here. The serious supply on this chart is this one. So we can say danger zone. Yeah. We can say, okay, this is going to be your target. So the danger zone is when you enter this trade, you're supposed to take your first take profit here at the previous high. We enter in the lower time frame at the previous high, then you can swing. The next profit 2, TP2 is going to be where? It's going to be at the danger zone. This is how you do your TP1, TP2. Ideally, you are taking your trade, you are taking your TP at the previous high. In this example, then your second TP at the danger zone. So this is why it's most important also to understand the danger zone. And also when the market is moving from here, the market may be moving like this, break this high, then come back again, move again, and give us a scenario C2 here. So now you can mark your trade here. You can mark your, so, oh, this is is it a scenario C2? Let me do it well. So the market can move like this, come back again, move like this. Yeah, a scenario C2. So and then excuse me guys, when you mark like this, let's change this one. When you mark like this, you will be expecting for the market to come here to give you a scenario C2, not knowing that this market is coming from the danger zone. So when the market is coming from the danger zone, the market has already touched the danger zone, your setup become a high risk. So this is the reason why you need to identify a danger zone to know the area you can trade free, an area that you can watch for the market to happen. There are sometimes market will react from the danger zone and still buy. So it doesn't mean it will not work sometime, but it is a high risk. So means if it is a high risk and you are sure that you want to buy, instead of risking your normal risk, you can reduce your risks. You can divide your risk times 2 and risk. But know that the market is coming from the danger zone. And most time people ask, why did this setup fail? This beautiful setup is because of what? Danger zone is before you. Those measures and measures demand and supply area on the chart that you are not taking note of, because those zones are so strong that they can push the buyers down. They can defeat the buyer at a point and push the market down. Or if it is a downtrend, the buyers can defeat the sellers at that point and push the market up. So if you find a setup close to a danger zone, it becomes high risk. So let's go to that is that for GBPCAD. So let's go to let's delete this one. Let's go to GBPUSD, and then we'll go to gold, because we are good. I'm a gold trader, so I'm expecting something on gold. Okay. So what do we have here? This GBPUSD self, I've been expecting it to drop. So what do we have here? Let's go to, I can't see any setup here that I can say, okay, this is where we want the market to come. At that time, we mark here, thinking the market is going to drop, but NFP news was able to push the market further, right? So, but let's go to the higher time frame, because we want to always be looking at the market in respect to Fantastic 5. We want to look at the market in different times frame, monthly, weekly, daily, in respect to Fantastic 5, down to excuse me, guys. So let's continue, guys. So we can look at the market in different time frame in respect to our strategy. So you want to see Fantastic 5 in all time frame. This is what you need to train yourself to be. So I can't find anything here that we can use to judge the market, right? So then let's go to the daily time frame. On this daily time frame, if this market is to drop, this setup on GBPUSD is not that beautiful for me. But if the market is to drop, I'm seeing this blind spot here, this one on daily time frame. I'm seeing this one here, so let's mark it out. But I think we can concentrate on other pairs that we have beautiful setup on them. But let's see, analyze this guy. So we can see a blind spot here. And since we find a blind spot on daily, we can say, okay, let's go to the lower time frame to look for confirmation. And we come to confirmation, you see that the market is it's a full body candle on weekly, show the strength of buyers ready to push this market up, right? So then on daily time frame, we don't take trade from the daily time frame as usual. If your setup is coming from the daily time frame, let's say the market made mistake to come back here to the daily time frame, we are going to look for entry confirmation on H1 MT80. If we find a setup on H4, entry confirmation is going to be on M15, sometime MT80, but 80% of the time, if you find a setup from H4 time frame is going to come from the M15 time frame. If you find a setup directly from daily time frame, you should be looking for entry confirmation on M13 and H1 time frame. So if this setup is to play out, if GU is to retrace, this is what impulse correction into this blind spot, then another impulsive move. This is where we want to capitalize on this. And then you can also say, okay, from this setup is on daily. From GU, if GU is to drop, right, you can also capitalize on a sell because it is a daily retracement. So you can sell for, as a day trader, you can sell this market for the whole full day. Remember that from this movement here, from this movement here to this movement here, if you go to the lower time frame, it's like this, characteristic of an uptrend. Let's say M30 time frame. And then if GU is to retrace back, it can give us a blind spot here or a Quasimodo, and then this is where you want to sell. This is where you want to capitalize on the retracement. And if you are selling, you are counter trading, your risk shouldn't be too high because you know that you are going against the trend. Even when we know that, oh, the market can retrace and keep going on. This is a buy market. Buyers can decide to do whatever they want to do. This market can keep pushing up without retracement. So if you want to counter trend, then you also have to know how to manage your risks, right? You can also buy on the lower time frame for you to sell back to this zone here. So we may not want to wait for the market to come here. We want to sell as day traders and get out of the market, right? So if the market is going to sell, let's view this market from the lower time frame. You see, if you look at this market from H1 time frame, M30 time frame, you see that it's moving in respect to market structure. This is the last high here. This is the last, even this one here. So the market come break here, from here, is ready to break this low here. So the moment the market they already started giving us characteristics of a downtrend, telling us that the retracement may take over. And this is where we can capitalize on this to sell back down or to even measure our risks 1:3. If we can get 1:3 here, even though the market will not get there, we are out of the market. This is how you do. You synchronize multi-time free market structure in line with a Fantastic Five. You need to be very good in market structure, right? So this is it for this space for the week, guys. So let's go back to gold. What are we expecting on gold? I was expecting a buy, and yesterday I told you guys the reason why we sold gold. I know that if you look at gold, the retracement on this guy is just too much. I mean, the impulsive move here is just too much, right? The impulsive move here is just too much because I know gold is not just going to continue like this. It's actually going to drop. And I said yesterday that if gold drop and break this low here, if they break this low, then we may be going down, back down. But if they come back and hold, like yesterday, I was expecting, I even marked this point here. There was a confirmation entry here. So, but it happens in the night, right? So if they come here and then they fail to break and give a setup, we can buy. So I'm looking at two ways on gold. If they come and break, we'll look for sell. If they come and then give us reason to buy, then we'll look for buy. This is my opinion on this guy, on gold USD. Like gold is all straightforward. Gold is just straightforward. Let's look at gold on the H4 time frame. So you look at gold on this guy, you see that gold can also push. This could be impulse, correction to this point, then another impulse. So we are only going to see entry confirmation to convince us to buy this particular pair. And also gold can also keep dropping, because if you look at gold within this range, it's like consolidating here. It's not moving that serious, right? So it may want to drop back down, then continue up again. So, but then whatever they want to do, for now, I'm buy bias if I see entry confirmation. But if they break the low on the H4 time frame, I'll look for entry. So as simple as that. Gold approach, like I said, is different here. So look at this market from the weekly time frame. You see, the market can still keep pushing down a bit before going up. But then this is the when we come back to H4 time frame, this is where it's going to convince me. This one is a low. When the market is moving, it moves in respect to what? The market is moving an uptrend, is respecting the higher low, breaking the higher high, right? If they come back here and they breach this low, I will be convinced to look for a sell back down to this point here. If they break this point, I will look to buy all the way to this point before the market can move. But if the market is going to go up, the law of market structure is that this low they don't take this low easily. They cannot just take this low easily like that. If they take this low here, like this candle here, they just clear liquidity somewhere here before moving. But if you go back to line chart, you will see that low, where is the line chart? You see that low was not taken. Look at the low. Look at this one here. It was not taken out. So if they take the low out, they will look for sell. But for now, let's see what they are going to do in the market. So this is my analysis for you guys this morning. So for all of these things to happen, we need to be patient for all of this to happen, right? But for me, I'm comfortably looking at gold to see the next move on gold. Then I will shoot. If it's a buy, I will shoot. If it's a sell, if the buy analysis did not go as planned, then definitely they will give me reasons to change my bias from buying to selling. But for now, we are 75% bullish on gold. So thank you guys for joining this Zoom session. So you can now ask your question. I'm going to unmute everybody, guys.